Yeah. Good afternoon, everyone. I welcome you all to RNA's Knowledge Series 2026. My name is Akash Tiwari, and I will be moderating today's session. As many of you know, that RNA is celebrating 30 years this year, and as a part of this milestone, we started this knowledge series. And today's session is our 14th webinar. And the topic for today is deposits and DPT-3 practical compliance guide. And I'm now delighted to welcome our today's expert, CS R. Ramakrishna Gupta, who is a senior partner of R&D Associates. Welcome, sir, and thank you for joining us for today's webinar.
Thank
It's
you.
my pleasure to moderate today's session with you.
Yeah, thank you, Mr. Akash, and it's my pleasure to share some of my knowledge on the most complex topic of under the company side deposits.
Thank you, sir.
Yeah,
So we'll move forward.
yeah,
Yeah. So before we begin, let me just quickly walk you through the today's flow. We'll start with some of the background, like why the law regulates deposits in first place. Then we'll move on to who can accept deposits, the statutory limits applicable, followed by what is not a deposit. After that, we'll go through some practical case studies, then understand like how to file a form DPT-3, consequences in case there is a non-compliance with deposit provisions, and finally, we'll be having a Q&A. One quick request before we start, please request all of you to keep your microphone on mute during the session. If you have any queries along the way, we will discuss the same at the end, or you can type your query in the chat box that can be answered in the Q&A session. So before we start the topic and the actual deposits, can you please help us understand where this law as deposits comes from?
see the concept of deposit under the company side, which is borrowed from the
Ramakrishna, your
yeah,
volume is low.
volume is low. I'll try. Yeah, not audible, sir. Okay. Now it's audible.
It's
A
Hello.
little, yeah.
little loud, sir, but
Lo-
the voice is actually low.
From my side, it's fine. Wait a minute. Wait a minute. Yeah, now it is audible. How is the audio now?
Yes, this is better, sir.
This is better, right? Okay.
Yeah, yeah.
I'll try to keep my voice a little high so that no, I'm audible to the participants here.
Sure, sure.
The, the concept of deposit which is in 2013 is something
So there's a network issue. It's completely breaking. Am I right, Rashida ma'am?
it's
It's
complete.
breaking, right?
Yeah. I'm seeing some network issue. Wait a minute, I will change my. Uh,
Yeah, there is a network
yeah,
issue.
yeah, yeah.
Yeah.
Network. I lost my. Improved. Akash,
Yes, sir.
how is the net now? It is
Lit- Little better, sir. But when you are talking continuously, there is a break in network.
breaking. Huh? Okay.
Yes.
Uh, I don't know what is the problem. Continuous problem అంటే partners చూసాము బయట ఉందా connected only and I have full Wi-Fi network connected here.
Okay, sir, please continue. I guess it's getting clear now.
Yeah, it's getting clear now. Yeah, I think sorry to that because sometimes no these Wi-Fi
Correct.
issues us
Yeah.
bother us. They have to
No
know these
worries.
kind of things. Yeah. So I was saying, the concept of deposit is something which is continued and borrowed from the 1956 Act, and same thing has been incorporated into the Companies Act 2013. and this is one of the most exploited area by various companies who have raised reports from the public, and especially with the with the no the these corporate scandals in Sahara case and Satyam case and Sharda case. So government has thought it is high time to high time to stringent the provisions of the deposits,
Yeah.
and rather they kind of made the deposit acceptance of deposits more disincentivized and disattractive for the companies for the kind of restrictions they have imposed in the Companies Act. So deposit per se is one of the negative feature under the Companies Act, especially for a small companies in case they want to raise funds for funds and then do ease of doing business, and deposit concept it is a negative feature.
True, true.
And why the provisions under the act has been stringently made stringent is because of the lot of experience gained by the the, the corporates and the general public and the ministry, which has received so many complaints on the companies accepted deposits. In most of the cases, no, the deposits have not been repaid, or companies have gone into liquidation, or the completely assets have been depleted and unable to pay the deposits. Though there is a provisions for extending the time period for repayment of deposits and all, the experience shows that no, even after extending the time period for repayment of the deposits, and companies have failed miserably in repaying the deposits to the public. So considering the experience of this, the government has made very stringent in terms of accepting deposits, rather raising deposits from the public.
Correct. Correct. That's what we see, that the earlier provisions have been further made stringent compared to Companies Act 1956.
Yes.
Earlier we had some provisions, but now it has made more uh,
More content,
stringent.
more
Correct.
stringent,
Correct.
and the penal provisions are very strong,
Very
and
strong.
very consequences very high, severe, and there are no. This is not a compoundable provision,
Correct.
and most and the definition of the deposit also has been broadened by defining it as a inclusive definition as against the exhaustive definition under section under 1956 Act.
Correct. Understood, sir.
Yeah, yeah, yeah.
We'll move forward and we'll try to understand, uh, like in plain terms, what exactly does the Companies Act defines deposits?
Yeah, yeah. So the definition of deposit is given under section 231 of the Companies Act, and also rule 2 of Companies Acceptance of Deposit Rules also defines what is deposit, which says that deposit includes, meaning it is an inclusive definition,
Understood.
includes any receipt of money by way of deposit or a loan or any other form by a company. That so the central underlying concept is receipt of money by a company in any form, whatever be the nature of the deposit, is constitute a deposit.
Deposit.
So if you carefully observe these three limbs under the deposit definition, you have the receipt of money by way of deposit, or by way of loan, or in any other form.
Understood.
Right.
Correct.
So the expression in any other form has to be understood with the basic character of deposit oblique loan only. It can't be different. So that we can understand once we examine the exempted deposits under the rule. So the combined reading of this deposit definition and the exempted deposits will understand that no, any amount which a company has received, which must have kind of characteristic of a loan or a characteristic of a deposit, with an element of expectation of making some gain out of it, will form as a deposit.
Understood.
And there are a whole lot of exemptions given under the rules, almost to close to I think 19 categories of items has been exempted under the deposit rules, which are not form part of the deposits.
Got it.
By and large, the definition, if you see, it is a negative definition. Meaning,
Correct.
whatever money you receive, it is treated as deposit, and
Dep-
you have to prove that it's not a deposit,
Not a deposit.
not a deposit. So that's how this definition of deposit has been defined under the Companies Act 2013. Earlier, under 58A, the deposit does not include the expression loan.
Correct.
It was only deposit. It was
Deposit.
receipt of money by deposit or receipt of money in any other form. Now they included the expression even loan also.
Correct.
One loan also. So loan is not something which you deposit with the company.
Correct.
See, the
Loan which you borrow.
fundamental basic understanding is something which you deposit with the company, that is deposit.
Correct.
And this, right?
Correct. Correct.
But here that they widened the definition and made it as an inclusive definition and included within it all amounts, every rupee which a company received is a deposit primarily,
Correct.
and which should qualify under exempted category, not to treat it as a deposit and make it outside the purview of the deposit regulations and provisions.
Got it. Now we understand that the deposit definition is inclusive and includes every amount, and whether to categorize as a deposit or not a deposit, the obligation lies with the company.
Not lies with the company, especially with the requirement of filing annual return DPT-3. Companies are expected to report both each and every amount, whether it is a deposit or not a deposit, and companies are expected to report that. So that thereby giving a lot of practical difficulties to analyze and understand whether a particular amount received by a company is a deposit or not.
Got it.
So once you declare and file with the register of companies, it must tally with your financial statement, and you can't change it later. There are
Correct.
many practical cases, instances we have come across, and people are wrongly classified, wrongly reported under DPT-3. Because the concept of deposit has assumed its significance after the Companies Act 2013, especially after 2019 onwards, when the government want to make it very stringent and
Correct.
requiring the companies to file a return, including those amounts which are not deposits. All the more it is difficult for the company secretaries, especially companies, in filing DPT-3.
Correct. Correct. That's what we see, like companies give the data, and it's really difficult for company secretary to, bifurcate accordingly, understand whether it's a deposit or
Deposit.
not a deposit, and report under the particular head given by the
Yeah,
form. Correct.
yeah. So unless you get a balance sheet drawn, unless balance sheet details are available and audited, so it becomes difficult to for you to identify the items requiring to be included in the DPT-3.
So, is there a simple way for our participants to test or identify whether, any receipt is a deposit or not? How to identify?
Why? See, you have to subject this receipt of money to any of the 19 exempted category. If this money is not falling in any of the 19 exempted categories, then it is safe. It will be treated as a deposit.
Deposits. Got it. Got it.
So it is a receipt of money. And obviously this money is, if you see the characteristic of the various the money, those monies which has no obligation to repay, like a share capital. Share capital repayment comes only during liquidation.
Liquidation. Correct.
And certain amounts maybe like preference share capital is not a deposit. But whereas a debenture, repayment obligation is there.
Is there?
Again, the
That
certain conditions are there.
10 years. Yeah,
When
yeah.
it is a deposit, when it's not deposit.
Not a deposit.
Right?
Got it. So we'll move forward. Here it's simple rapid fire for all the participants. So I request all the participants to post your answer in the chat box. So you'll be given a 30 seconds now. Yeah. So a private company takes a loan from a director's uncle but does not take any written declaration from him. Is this a deposit? A, no, a relative's loan is always exempt declaration or not. B, yes, without the written declaration, this exemption does not apply. C, it depends only on whether the amount is over 25 lakhs. D, it depends only on whether the company is a startup. So we have answer B from Ms. Khushbu. I request other participants to post their answers. Fine. We'll move forward. Yes, B is the correct answer.
Yeah.
Without the written declaration, this exemption does not apply. So it's a deposit.
Yeah, yeah. See, any amount received from the director, relative of a director of a private limited company, is exempted deposit, provided it's a declaration to the effect that no, this is deposit. These are the own funds. This is not on lending borrowed funds. So as long as it's not a borrowed funds and satisfies that no declaration is given proving that it is his own funds, then it is not deposit.
Got it. So we'll move forward. You want to understand why does the law surround deposits with so many conditions, and what are the sections and statutory framework that has been designed for deposits?
So broadly, there are 5 sections. I think which is being replaced also in the PPT. Yeah,
Yeah.
section 73 to 76A deals with the deposit framework, and the primary section deals with the deposits in section 73, which says that no company shall accept or invite raise deposit from the public by issue of by invitation and subscription, except subject to the conditions given under this chapter.
Yeah.
73, 76. And the conditions given are that so for companies for raising capital from members and raising capital from public.
Yeah.
Broadly, these two categories.
Okay.
And again, within the category of members, there are certain rules, conditions are there where companies are asked to issue a circular or statement or advertisement and raise capital from the public. In case of a private limited company, the procedure is very simple. They can raise from the members, but there is a limit on the quantum of deposits that they can raise from a private limited company. The quantum is up to 100% of the paid up capital, free reserves, and securities premium account. So So up to that amount, private companies can raise capital, and beyond this, yes, then the procedures like issue of circular and filing a circular with the register of companies and keeping the funds in the reserve deposit repayment reserve, and then certificate from the chartered accountant. All these conditions will apply in case if the private companies borrowing more than this aggregate of these 3 amounts.
Got it. So moving forward, we want to understand are there any special relaxation for any private companies or startup when
Yeah,
it comes to
apart from this, see, relaxation in terms of procedure for raising deposits from the members are available apart from this quantum, and also there are 2 more categories categories are available. That is for startup company up to 5 years. Startup company need not follow the procedure given under class A of subsection 2 of section 73. Class A to class D, those are not applicable to the startup company for a period of 5 years from the date of incorporation. And also however, the private company exemption, this is to benefit from this exemption of procedure if it is associate company or a subsidiary company of any other company. It should be standalone company. Standalone company.
I understand. So if a
And
company
another category, if the borrowings of the such company from the banks or financial institutions or any body corporate is less than twice of paid share capital or 50 crores, whichever is lower.
there are another condition.
Such companies also, these conditions are exempted. They need not follow the procedure. Simply pass a resolution, raise capital from the members. Otherwise, you have to issue a circular and file a copy with the register of companies and deposit that amount, like no 20% of the amount depositing the following year. So
Correct.
what these conditions, I don't know. See, when you're raising a capital and put a condition of 20% putting in the liquid funds, you fail to understand why we would rise a deposit. You raise a deposit for the purpose of for the immediate needs of the companies, but you are imposing them to keep 20% of the amount which are maturing into the liquid funds deposit redemption reserve. So your hands are tight. That's what I'm
Correct.
again connecting to my original remarks. This is one of the most negative feature of the Companies Act, and companies are completely discouraged to raising deposit money, especially for small and medium small companies. No, small companies will not have a network, will not have a good track record, so they can't raise funds from the friends and associates.
Correct. I guess considering the, like earlier, what lawmakers have seen that the companies are accepting deposit, but never they are refunding it.
Yeah.
So
Yeah,
considering
but
that,
they
maybe
see,
they
yeah,
want
see,
to, yeah,
they can impose, they can make it more stringent for raising funds from the public, but a small companies, startup companies, see now separate treatment is given for a small companies with up to paid up capital of 10 crores and 40 crores, and now they increasing
100,
to
yeah,
40 crores and 200 crores. So they should be permitted to rise from the friends and associates.
correct, correct,
it is it is a risk of the person who is depositing. As long as it is within the close circle, within the close friends and families, it
correct.
is a risk.
So they should get in the exclusion list
Yeah,
itself
yeah.
that,
Because see,
certain points for specific
yeah,
to
yeah,
private companies.
yeah. See, most of the small companies, startup companies, know the funding. You have various modes of funding, like bootstrapping funding and pre-seed funding, seed funding. No, these becomes these funds unless you are unless you are a technology rich company, your idea is so very good. Unless you convince the investors, you raising the capital at initial stage will be difficult. You might want to rise from the your close network and sources, but now they are plugging them.
Correct,
Of course, but startups are permitted, but all small companies need not be qualified as a startup.
correct. So moving forward, like we would like to now understand what is not a deposit. Like the other side, we are
Yeah,
seeing like what will be a
yeah. So
deposit and
yeah, as I said, no, the deposit definition has to be understood from the exempted deposit. If what is not deposit is a dip.
correct,
Other than those, uh, that is deposit.
correct, correct.
So the whole last lot of list is given under the company's acceptance of deposit rules 2014, and for ease of understanding, no these exemption categories. So if the amount received falls in any one of the exempted category, it is not deposit. Otherwise, it is deposit.
Deposits.
So if it falls within this exempted category, fine, you are free from the stringent procedure. But otherwise, you have to follow the all process, and the you also have to face the consequences. For the purpose of understanding these exemptions, maybe broadly we can understand and group them group them by its source and character of the money which you are receiving.
correct, correct.
So I made an attempt to kind of reconcile and try and see what category of these amounts, what nature of these amounts which are given under exempted category. Broadly, there are around five categories are there under exempted category. The
Okay.
category one is basically the amount received from sovereign sources or institutional sources, like amount received from central government or state
Central
government
government, state government, yeah,
or local authority, statutory authority. Basically, these are the subsidies.
correct,
You,
correct.
like today you have subsidy for solar, subsidy for wind energy. So these kind of subsidies which you receive from from the government, so they are not treated as a
Deposit.
deposit. Deposit. So if source is from like government and government authority, it's not a deposit. Likewise, any amount received from the bank, amount received from a bank in the form of a loan
Finance
or
institution.
borrowing funds,
Correct.
they are not treated as a deposit.
Definitely.
They are not treated as deposit because basically bank has their its own framework to ensure that no money is recovered.
Yeah.
See, the whole concept is surrounding upon the depositor should not be fall into the prey of the promoters. So, if the lending institution is a bank and which has well-defined framework for them, no point in again restricting such things. And banks have their own network, their own framework. So
Correct.
it has been given falling under the exempted category.
That's why they have been exempted. Yeah.
Exempted category. And second, and third one, public financial institutions, insurance companies, and scheduled plans, blah blah blah. Some of them are companies as well. So they have categorized, they are exempted under this category. Also, if some of them are a company like NBFCs and all companies, they are exempted under the separate category like intercorporate loans and all.
Okay.
So the source is from the banks, central government, or financial institutions are exempted. Another category what given a category is that foreign sources and cross-border sources, which are subjected to FEMA. Amount received from a foreign party, foreign government, a foreign company,
One.
or foreign citizen, or non-resident Indian. So all such amounts which are subjected to FEMA compliances. So FEMA takes care of that those amounts received by the company. Hence they have been kept under the exempted category. So that is second category. The third category is intercorporate and capital market instruments.
Cap.
Intercorporate loans and capital market instrument. If you see the exempted category, class 5, amount received against issue of commercial paper or other instrument issued as per the RBI
Guidelines.
These are capital market instrument is exempted. Any amount received from any other company, intercorporate loan, intercorporate ICDs under class 6. And class 7 is there, which says that no share application money or advance towards allotment of securities pending allotment, subject to condition that no, there should be within 60 days, allotment should have been done. Otherwise, within 15 days after the expiry of 60th day, you have to refund it. Failure to refund it, it is treated as a deposit. So, the question would come, so by treating it as deposit, what is the intention? Company has received a share application money.
Right.
Shares were not allotted. Law requires you that to allot within 60 days. If you are not allotted within 60 days, you have to refund within 15 days thereafter.
Correct.
If not refunded, it is treated as deposit. By treating it as a deposit, they are empowering the so-called investor who has given this money as a share application money to recover this money under the provisions of section 676A. So how do you recover if the company is neither allotted shares nor retaining money?
Correct.
Share application money as such, there are no provisions under the Companies Act to recover for an applicant. As long as if for a public listed company and from going for a public issue and all, SEBI regulations are there, they are taking care of it. But unlisted company where money is subscribed, there is no stringent provision here under the Companies Act unless you treat that as a deposit. So they're deeming it as a deposit. So another question would come, if I deem it as a deposit, do I need to comply with all the deposit provisions like passing a resolution,
Issuing
circular, blah blah blah.
Correct.
So money is already received it. So I see deeming provision is purely for protecting the investor who has given money in the form of a capital market instrument. In case you don't appropriate this towards that capital market instrument to issue securities against that, those people can recover this under the deposit framework. So deeming provision is to that extent. Of course, another procedural non-compliance might occur, like ROC issuing notices and saying that this is deposit, you have not complied that section, this section. But primarily, the deeming provision intention is to protect them for the purpose of recovery. If it is not appropriated for the purpose, it is advanced to the company.
Understood.
Next is secured bonds and debentures, on which first charge or pari passu charge lies are debentures compulsorily convertible into shares within 10 years. Again, another securities, capital market instrument, they are also not treated as deposit.
Not.
But for the CCDs, compulsory convertible debentures, after conversion option is given after 10 years, then it is treated as deposit. So you
Not
have been restricted. Conversion must happen within 10 years.
within
Number,
10 years.
second, the conversion must be mandatory, compulsorily.
Come.
So that's how optionally convertible, partly convertible, all these things are not
Not.
not an exempted deposit, and they're subjected to deposit provision.
Yes.
Non-convertible debentures not creating a charge on assets and unlisted in a recognized stock exchange. This is a new insertion under 9A, 9A, and to enable the debt market, and in case if the companies are raising NCDs, which are not
Secure.
which are not secured, but if they are listed in a stock exchange, then they are not deposits. So SEBI has issued separate regulations for listing of NCDs, and then that's how even now even private limited company can have their NCDs listed in a stock exchange.
Correct.
So Companies Act is not regulating them because SEBI is regulating such instruments, because the condition here is for them is to mandatory listing. Next, amounts under a collective investment scheme in compliance with SEBI regulations. Clause 14. That is
Again,
also
regulated by SEBI.
regulated by SEBI. Amounts received from alternate investment funds or domestic venture capital funds, and rights and mutual funds registered with SEBI. So these are all capital market instruments, and intercorporate deposits are exempted from the purview of deposit. That is category. Next category, third category rather. Another category of amounts which are not treated as deposit received from the directors, promoted from the directors of a private company and public
Private.
company, both are not deposit.
Not.
Amount received from the members also not deposit, but subject to conditions. We have seen subsection 2 conditions. Third, amount received from the promoters who who are not directors, but they have been insisted by the banks
Banks.
as a part of lending arrangement to bring money. Such money is not a deposit.
Okay.
So that is another category. The next category is, this is where a lot of issues will come. The categories like business and commercial advances.
Advances.
Business and commercial advances, that is 12A to 12A to 12G. All these 7 categories, with certain conditions, they are not deposits. Otherwise, if they fail to meet the conditions, they are treated as deposit.
Deposit.
So going by each category, like advance for supply of goods or provisions of services, for a period of up to 365 days, it is not a deposit.
It is not.
If goods are not supplied or services not delivered for a period of 365 days, then
It will be treated as deposit.
deposit.
Understood.
However, there is a rider. It says that if there is a dispute with respect to that goods and services, then the 365 days may not apply to such cases.
Such correct.
The provision is not the condition is not saying to exclude that period of dispute. It simply says that no, 365 days does not apply.
No. There is no limitation period that has
There
been.
is no limitation.
Understood.
See, the dispute may be running for, let us say, more than 365 days, 1 year, 2 years, 3 years, 4 years. Once the dispute is settled, what happens? Whether goods has to be delivered, service has
money
to be
has-
provided. If so,
Correct.
within how many days? So I think here they were not they were little liberal there. Simply they said 365 days does not apply.
Correct.
Next. Advance received in connection with consideration for immovable property under an agreement or arrangement. And as long as this amount is adjusted towards immovable property or as per the agreement, it's not a deposit. But otherwise, if you are not appropriating this towards a movable property, then it is treated as a deposit.
Treated as a deposit.
It is treated as a deposit. Advance under long-term projects for supply of capital goods. In a long-term project, no, you have a huge capital intensive industry. You keep supplying the capital goods, and if may not be everything at one go as the project setting up happens, and at intervals you will be supplying the parts, which may be more than 365 days. In such case, if it is covered under long-term project, then such advances received against the supply of capital good is not treated as a deposit. But however, if this supply of goods are purchased as movable property, and this capital goods must be authorized by a board resolution if the board resolution is required, or general body resolution if the general body resolution is required. If it is proved that these advances is received in contravention of any of the authority which companies ought to have taken, then they disqualify to be exempted deposit.
Yeah.
Next item under this is advance towards future services under warranty or maintenance contract.
Okay.
You might give future for like after sale services and all.
True.
Some of the cases you take amount in advance, and wherein warranties, like now you take, let us say all car manufacturing companies, they take advance towards warranty for next 3 years.
Yeah.
Most of the companies are coming with 1 year or 3 years warranty. Amount you receive towards that warranty, and which is spread beyond 365 days. So those things are also not
termed as deposit.
amount received advance towards warranty or service is not a deposit. Advance allowed by a sectoral regulator or as per the direction of central government or state government, this is also not a deposit. Advance for subscription towards publications to print or electronic media, like news channels are there, and new electronic print channels are there, and they are receiving advances from the subscribed members and all, and the subscription may run beyond 365 days. So all of them, of course, their period of 365 is not given, but per se that amount is an exempted deposit.
Got it.
So these are the category falling under the business and commercial activities. The next broad category of deposits which are exempted are amount received from employees, or amount held in trust, or startup instruments. It should be a startup company.
Start.
Yeah. So if you have received an amount as a security for a non-interest bearing security deposit under contract of employment. Sometimes companies takes security deposit when they are hiring an employee under a contract of employment, and that security deposit is not a deposit.
Understood.
Any non-interest bearing amount received or held in trust. Amount held in trust. It is a vague expression, wide expression rather. You have to prove that you are holding this amount in trust for the benefit of the beneficiary, and it should not have any interest. So case to case basis, you have to prove that this is amount held in trust. Then it is treated as not deposit. Otherwise, a deposit. And startup companies which have raised 25 lakhs or more in a single tranche. From any person is not a deposit. However, those in case of their convertible notes instruments are there, the convertible instrument must be converted within 10 years from the date of issue. This is another category which are not treated as a deposit. The last category is the amounts which are specifically regulated and which are issued by regulated entities or certain schemes, like amount received by a Nidhi company under rules made under section 436. I think now this Nidhi companies are barred from raising capital.
Okay.
So this is there only on the theory. Amount received by way of a subscription to a chit under a chit fund company.
Chit fund.
So it's also not deposit. So
We
these are the
understand.
19 categories of amounts. Some of them by nature itself is not deposit. Some of them by satisfying the conditions
Condition.
like intercorporate deposits and all, or advance received towards supply of goods and services with certain conditions, they are not deposit. Some of the amounts are by nature, but if you are receiving the source is XYZ, automatically they are not deposits.
Got it. So we see that the exclusion list covers all the transactions per se which are directly exempted, some with the conditions,
With
and some
conditions.
based on the business
Yes.
nature of the business. As you
Yes.
mentioned, like needy companies, chit fund
Chit
companies.
fund companies.
Correct. So we now considering understanding the all the exclusion in details, we have another rapid fire for all our participants. An unlisted company issues an unsecured debenture to another unlisted company. Is this money exempt from being a deposit? A, yes, the lender is a company, so it's always exempt. No, an unsecured unlisted debenture doesn't qualify, so it's a deposit even though the lender is a company. C, yes, all the debentures are exempted, list or not, secured or not. D, no, no company can ever lend to another company without it being a deposit, becoming a deposit. So request all the participants post their answer in the chat box. So we have answer A from Ms. Vanita Agarwal. Another answer from Ms. Khushbu. That is again A. Yes, correct. The answer is A.
See, on here, here, this amount may fall under multiple category,
Correct.
like amount advanced by a company to another company towards advance,
Correct.
towards advance for supply of goods
Supply
and
of
services.
goods.
So it is a specific category, and intercorporate deposit is a general category. Whether the question arises here, whether that 365 days condition apply or not.
So since the amount is with respect to non-convertible debentures has been given by one company to another company, that's where we are seeking the exemption
Yeah.
as intercorporate borrowings.
Here between two companies, so it is not deposit, it's exempted.
If it had been the other case, like the amount has been received from an individual, then
Yeah.
what would be the scenario, sir?
If it is individual, if the individual is a director, again subject to declaration. If it is individual as a member, subject to complying with the conditions of section 73(2) as to the limits, 100% of the paid up share capital, free reserves and security premium account, they are not deposit.
Got it. So we'll move forward. Now that we know like what is a deposit, what is not a deposit, now we'll try to understand like how to report this transaction, whether as a deposit or as an exempted deposit.
Yeah.
So can you please
Yeah, most
run
practical
through us
this.
like how to file Form DPT-3?
See, Form DPT-3, if you go back and see, there are initial. It was introduced in the year 2019, if I am right. All
Correct.
companies are at stretch are required to file the DPT-3 one time. In case for against all amounts issued by the company from the period of 21st January 2019 to 31st March 2019. So during this, all amounts received during that period and outstanding as on 31st March 2019, MCA required the companies to file a one-time DPT-3, and thereafter MCA has required all the companies to file annual DPT-3. Broadly, DPT-3 requires the companies to furnish the information brought in two category. One, amounts which are falling under the category of deposits, that means which are deposits. Second, amounts which are not treated as a deposit, or rather exempted deposit. So
Yeah.
broadly these two category of amounts which you report, and we have to report by 30th of June. And I think for the current year, rather previous year, your time extended up to 31st July.
July. Yeah. Correct. Correct.
And every company has to file it except the government company.
Correct.
How see the difficulty is that how do you check? It's see most of the items does not come with such an explanation. Any amount for anybody who is preparing from DPT-3, and the difficulty arises as to what amounts you to include under deposit, what amount you have to include under exempted category.
Exempted category.
So you have to check each and every item of the balance sheet and subject them to certain tests.
Correct. Try to
So
understand as you initially informed those three element tests, whether there is a receipt of money, repayment obligation is there,
is there
and whether it's excluded from the
excluded from that category?
rule 2(1)(c). Yeah.
Yeah. Yes.
Accordingly, we'll have to report whether the transaction is not a deposit or whether the transaction is a deposit.
Deposit. Yes.
Okay. Yeah. Understand. So we'll move forward. Now we'd like to understand, like, if a company actually accepts deposits and from its
Okay.
members or from its public, what are the conditions or what is the procedure they need to follow?
So deposit acceptance of deposits you must require a member's approval apart from the board approval, and you and you must file a circular in DPT-1, issue circular and file the same with the register of companies, and maintain a register of deposits. That is one of the requirement.
Okay.
And obtaining a rating. Whenever applicable cases, you must obtain a rating, and also obtain insurance. So because say, obtaining insurance and
Deposit.
obtaining a rating is very costly affairs. That's why this
Yeah.
rising funds through deposit route becoming more cumbersome and complicated.
Okay.
And maintain a deposit repayment reserve of up to 20% of the amount which are due for repayment in the following financial year.
Okay.
And file annually the form DPT-3 form. But these are the compliances which a company which has accepted deposits to do.
Understood.
And you have like what kind of deposits, what is the tenure, how long you can deposit, what is the repayment period, all these things. I think the rule says that no, you can't
Correct.
accept a deposit which is repayable not less than 6 months,
Within 6 months.
which are less than 6 months or within 6 months
Maximum
rather,
36.
and
Yeah.
repayable after 36 months you can't accept them.
True. True.
But however,
The
for
short duration.
emergency needs, you can accept deposits which are repayable within 3 months.
Correct. Only if such deposit does not exceed 10% of the aggregate paid.
Again that
Again, a
not
ceiling.
exceeding 10% of the aggregate paid up share capital, free reserves, and security PIM account.
Got it.
Here the question comes: what is free reserve? So they determining the 10%. Most of the cases people get into difficulty as to what is free reserve. Free reserve, if you see the definition of free reserve is amount which is available for distribution as a dividend.
Correct.
So in such case, whether amount lying in the credit balance of P&L account,
Will qualify as free reserve.
whether it qualifies as a free reserve,
Free reserve.
because it's available for distribution. Answer is no. Answer is no.
No. Yeah.
No. See, the question comes as to if companies are making profits, earning profits, and whatever amount which is left after appropriation in the form of dividend or whatever it is, you have option to retain it in the P&L account, and you have option to transfer to certain reserves.
Reserves.
If you are not chosen to transfer that to reserves, then your borrowing limits in terms of like deposits and other borrowing limits like no under the 188, 180 and 186. Those limits gets impacted because all amounts which are lying in the surplus is not free reserve
Not free.
for the purpose of determination.
Let-
Unless you transfer them to a reserve, the nature of which is to nature of which is to uh, for specific purpose, then only it qualifies for the purpose of determining this quantum 10%.
10%.
So the expression free reserve has to be carefully understood before you determine the 10% quality.
So appropriate categorization is very much important what we see
Yeah, well, I'm saying
and
free reserve has
transferring.
to be understood very carefully.
Correct.
Yeah, because you had an expression called General Reserve under the Companies Act 1956 Act, but now the General Reserve was removed. Now now in the new Schedule 3 of the Companies Act 2013, no General Reserve. It only says reserve. Under the category reserves and surplus, after the capital reserve, debenture redemption reserve, and like no preferential redemption reserve. After that, you have last category as other reserve
Other.
and specify the purpose of that reserve.
Yeah.
There you will get free. You may get
Free.
free reserve, and you may transfer certain amounts to free reserves.
So others
But
reserves are specifically for a specific instrument.
specific purpose. And
Yes.
see, even after transferring free reserves, they are available for distribution.
Correct.
Even if you don't transfer, also available for distribution. But if you don't transfer to free reserve, for determining the 10% quantum for rising deposit, they will not qualify.
That amount will not qualify.
See, ideally, a free reserve is serving as a capital adequacy requirement. Like companies want to raise funds, borrow funds, they must have a long-term funds available with it. Based on that long-term funds only, you determine the quantum of borrowings which you can do it.
Okay.
So if the profits are kept idle as it is, lying in the surplus account, then any day that can be used and distributed in the form of dividend.
Correct.
Like that. And apart from that, you have the security and deposit trustee. So wherever security debentures deposits are issued, you must appoint a trustee
Okay.
and provide a security not less than the market value of the. You can't raise the deposit not more than the market value of the property which you have given as a security. See, like it is generally understood, all security debentures, all debentures are deposits only,
Okay.
unless they are secured. But they must be secured to the fullest extent. If 100 crores is raised, you must be secured by a asset, the market value of which shall not less than 100 crores. Yeah.
We'll move forward and then.
And interesting question recently came here.
Yeah.
Who can be appointed as a trustee?
Deposit trust.
Trustee for the debenture trustee. Mostly
Okay.
debentures only. Debentures, see, secured debenture is not a deposit. If you issued a secured debenture, you must appoint a trustee. And
Trust.
who can be such person? Whether anybody, whether employee of a company, whether a director can be a trustee. Law is silent on
Law
that.
is silent. Yeah.
Law is silent on that. But somewhere I have heard that MCA suggesting that persons who are registered with SEBI, for listed company who have issued debentures, there is the person who are registered with SEBI to act as a trustee. Those persons should be appointed as a trustee. And somewhere MCA chosen, I meant to get the reference to that, but somebody told me MCA has chosen that only those people who are registered with SEBI can be acted as a trustees, because trustees have a lot of responsibility in terms of preventing and protecting and preserving the security,
Interest.
preserving the
Beneficiaries.
repayment of deposits, public debentures, ensuring and taking action if the companies are moving to a situation where they are unable to repay, then immediately the trustees has to swing into action and then take the necessary steps.
Okay. So we understand that if a company accept deposit, they need to follow the stringent provisions along with that, they must have all these prerequisites
Yes, yes,
like
yes,
debenture redemption reserve,
yes, 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 yes.
deposit insurance.
Yeah, yeah.
Yeah. We'll move forward now when we understood what is a deposit, what is not a deposit, the procedure, exempted deposit. We want to understand what are the consequences if a company fails to comply with all these provisions.
Yeah, yeah. See, one, as I told you earlier also, uh, some of the amounts which by its nature, by any extent of imagination, you can't treat them as a deposit, but law making them to treat it as deposit if the conditions are not met. The, so all the categories, as I explained, categories of amounts. Yeah, I will address Madhur Gandhi this question. So all the categories of amounts which are in the nature of business and commercial advances. Eh, At any stretch of imagination, you can't call it as a deposit, but all of them, almost all 7 categories were included under the category of deposit, under a category of exempt. I will say it is deposit on failure to satisfy the condition.
Condition.
So purpose or idea is that, as I said, in a commercial today for recovery of amount, of course you have IBCs coming in. Though insolvency bankruptcy codes aimed at for revival, was most of them are for recovery only. But aim of the legislation is for revival, not for recovery, not for recovery.
Not legal.
So by treating any failure to repay, any failure to appropriate the amounts towards the contract, supply of goods, services, immovable property, or supply of capital goods, or performance of a contract, or future services. Okay. So if conditions are not met, service is not given, goods are not delivered, under this limb, the supplier of goods and services and blah blah can recover that money by invoking the provisions of sections 73, 74 and 76A, 76A, and file a case against such people, companies, saying that, alleging that no, the performance is not done, like goods are not supplied, or services not provided, or in case of real estate project, amount is received, neither you allotted the flat nor you delivered the flat. You given in advance.
Correct.
And project is not taken forward. You not allotted also. Most of the times, no. Nowadays it's popular in Hyderabad. All OTT projects are coming in. Real estate projects. You sign an MOU. You allocate, but flat you are not allocated. You just sign an MOU, but money you taken and then you forgot.
Okay.
So in such case, those people can also invoke under this deposit provisions and file an application to petition rather to NCLT and press them for consequences and also for recovery of that amount.
Recovery.
And consequences, as is seen here, is severe. A minimum fine of 1 crore or twice the amount of deposit, whichever is lower, but this may extend up to 10 crore
10
rupees. This is in addition to repayment of deposit itself together with interest. So these are all corporate lendings, corporate advances, commercial advances, if not appropriated under this section 76A, they can recover. But interestingly, after an introduction of IBC, this is more stringent and draconian legislation. All Section 9 applications, people are invoking Section 9 applications. I would say all Section 9 category people, if their amount is not crossing 1 crore, they can invoke under Section 76A, go to NCLT for a penal consequences and also for recovery.
Recovery.
I I think I one case one of our known circle they invoked this provision and then company came forward and settled the matter. So we can appraise the impress the creditors, especially operational creditors who have not got the amount for the services
Yes.
supplied under this category.
Under this section. Correct. So not only IBC provides, indirectly the Companies Act,
Indirectly, for recovery, you can do there.
correct. Indirectly, Companies Act is also providing for all the creditors or other lenders
Because you have given
as
money,
a
but goods
recovery.
are not delivered to you.
Correct.
Amount deposited with the company on
As an
assumption that you
advance.
will supply goods to me,
Hmm.
right? You have not supplied goods.
Right.
When you have not
Still
supplied
you
goods, you
can go.
defaulted.
Right. Still we can go and
Hi, na.
approach
And the
NCLT.
amount due, apart from the imposition of penalties on the company, even directors are subjected to criminal consequences of imprisonment for 7 years and separately fine of 25 lakhs to 20 crores. Both, since it is a cumulative, it is a adjective is and is used here. This is a non-compoundable offence. Matter will be adjudicated by special courts. And if this and if intention to not repay or not supply is fraudulent and the mensoria is proved, then it may also tantamount to a fraud, and the companies and directors may be subjected to section 447 of the act.
Understood. When the default is willful, so we understand
Yeah.
that they will be again liable under 440.
Yeah, willfully. See, you have funds, but you are not repaying. Willful, that is willful only, na. You are
Correct.
paid. I have paid under OTT scheme so much amount. You are not delivered goods, and you have money to repay. You are neither repaying it, not delivered the goods. What is your intention? Your intention is to defraud.
Default.
You floated a scheme of OTT, blah blah. You had an MOU signed, all these things. So, mentioning what wow, intention is bad, malified.
Yeah.
So you can also invoke 447.
So now we understand that how stringent the provisions on non-compliance.
Yes.
We'll move forward to our main part of the session, that is case studies. So we have circulated a Google form, and based on that, we have received certain queries, practical situations, including several questions submitted by the participants. In each case, I will read out the situation and I'll request sir to walk us through it.
Yeah.
So the first case is, as I guess this has already been discussed, still I will read out. A company
Yeah, you
took
already
an
discussed. This
advance
is,
from
this is
a
the case
buyer for a
already.
flat
Yeah.
and called it as security deposit. Company never handed over the possession of the flat nor returned the money. After years, the buyer said that this was a deposit under law. Is buyer right?
Buyer is right, and buyer can deem it as a deposit for the purpose of recovery.
Understood. The next question is, company received money towards a share allotment but did not issue the shares for several months. Is this a deposit under the law?
Yeah, deemed follows 60 days and thereafter within 15 days for repayment. If not repaid within 75th day of receipt, then it is a deposit, and then that person can invoke section 76A.
76. Understood. A director lent money to the company and separately his relative also lent money. We treat both as exempt. Was that correct?
Right now, see, directors are relative of the directors of the company. As long as this money lent is own sources, it's not deposit. And they're correct.
Relative is exclusively covered only in case of private companies. That's what.
Private lending. Yeah. Related to a private limited company, not all companies.
Not all companies. Okay. Company's banker has asked the promoters to bring in an unsecured loan before it would approve the facility. Company has repaid the bank loan, but the promoter's money is still with the company and not returned. Is that a problem or is that a deposit?
Obviously, as long as the outstanding loan is subsisting, it qualifies to be a non-exempted deposit. But if this loan is repaid, the money has to be repaid to the promoter, and one promoter has a right to treat it as a deposit and then invoke Section 76A for its recovery.
So as and when the loan is repaid, the
Yeah,
promoter's
it is not
amount
deposit
has
as long as loan is subsisting.
correct. Understand. So the condition itself says
See, the
pursuant
question,
to
see, condition itself says that money is bought, two conditions. One, money is bought as a condition for a borrowing from the bank. If the bank is insisting, a financial institution insisting, then you bought the money, and the repayment of that is due. So as long as that period, it is not deposit. Once it is repaid, and this money is due for repayment.
okay. And if it is not repaid, it will be termed
Yeah.
as deposit.
But the question will come whether if the company has borrowed fresh borrowings from some other party, irrespective of that, fresh borrowing is, and this money is not linked to the fresh borrowings,
Yes.
not bought to the fresh borrowings. But if the fresh borrowing comes with the condition that no, this promoter money has to be retained, and that condition is approved by this promoter to continue and retain this money with the company, I think there is no risk there. Companies can treat it, keep it, and it need not be treated as a deposit.
Yeah. So it will be categorized under exempted debt.
Exempted category.
Got it. The next question is, if a company borrows money from a sole proprietorship firm whose proprietor is one of the company's director, should such borrowings be regarded as a loan from the director?
Sole proprietor company is different. Sole proprietor is not a separate entity in the eyes of law.
Understood.
So it is a director money.
It's the same person.
Same
Yes.
person.
So this will be
Can I- Sorry for interrupting, sir.
Yeah, Priya.
This is Priyanka from RNA. Sir,
Thank you.
actually, I've seen one practical case wherein they're considering it as the same amount, since both the sole proprietor and the director will have the same PAN. So the amount is reflected as the amount received from a director or relative of director in the DPT-3 of last year.
Okay. Yeah,
Is
see,
it wrong then, sir?
there is no wrong here. Sole proprietor is not a person, not a legal person. And obviously both will have same. See, you can't call it as a both. Only before eyes of law, for the purpose of income tax, you are doing a business under a trade name. And but they are not different. They are one and the same. Oh, obviously income tax PAN also will be the same. It is a
it is
director
as
itself.
good as you have borrowed from the director itself.
It is as good as a director. It's not a different.
So it
See,
is not a deposit, right?
it is not a deposit because you borrowed
Yeah.
from a director, no?
Yes.
The question continues, if the same director subsequently resigns from the company and the company thereafter obtains another loan from the sole proprietorship firm, how should such loan be treated?
Two things. You have to ask two things here. Subsequently retains, retiring subsequently while the initial amount is still lying and not yet to be repaid. One. Second, any further money received from that person who has already resigned, he is a deposit.
Okay.
That is simple, straightforward question. But what if the amount received at the time of he being a director, since he is an exempted director, since he is an exempted deposit, you are not bound by the provisions of that 6 months, 36 months, blah blah.
Okay.
What happens? That's what I think. There is a query. Madhur Gandhi also posted. See, you can't perennially enjoy the benefit of this exemption. Fine, at the time of receiving this amount is treated as deposit subject because you are meeting the conditions.
Condition.
Now you are no more meet the conditions, that you are no more a member, oblique you are no more a director, or you are no director. So once you are no more a director, how long you can continue? One, if the conditions of the money received from the directors has a conditions defining the repayment period, and I would say maybe till that repayment period is due, it may not be, you may safely treat it as not a deposit.
Okay.
But if you use this as a device, if you are using this as a device and receiving this money, before receiving you make him as a director and have an agreement for repayment up to 5 to 10 years. Have an agreement for repayment for, let us say, 10 years.
10 years.
10 years. And since no restrictions, you put an interest clause of 24%.
Okay.
You put an interest clause of 24%.
20.
And no, see, as long as you are a director, it's not a deposit, no restrictions on the interest, blah blah, 24% you've been paid, you are enjoying. And then after 6 months you resign. After 6 months, after 6 months you resign, can you enjoy the benefit of that balance 4.5 years or balance 9.5 years, whatever it is? Answer is negative. In my view, answer is negative. You can't simply take the shelter of being the amount at the time of receipt of money is a director.
Correct.
No more is a director, and act is silent. Since my contract, when I entered into the contract, it lasts for 5 years or 10 years. So I will continue to enjoy the benefit of that exemption category. So no limits as to the interest applies to me. This maybe looks theoretically fine, but I don't see that will not sustain that argument. The moment you cease to be a director, I think the provisions, considering the stringent nature of these provisions, deposit provisions, that cease to be deposit.
As and when the condition is not met or breached, the
Yeah,
amount will be termed as deposit.
yeah, because see, you see the similar nature in case of promoter. Money bought from promoter as a condition for borrowing from a bank.
Bank.
And with the money bank borrowing is repaid, and you can't enjoy the benefit.
Correct.
Of course, you may argue saying that explicitly provided for the promoters that as long as loan is subsisting, it is not a deposit. But you not provided for the directors. You may argue that. Saying
Definitely.
that as long as the director money received is not a deposit.
Correct.
So I see this is somewhere it's a loophole. But somewhere the spirit of the provision, spirit of the section gets hit, and I see conservative approach is that it ceases to be deposit. It ceases to be unsecured. It ceases to be an exempted deposit. It will be a deposit. That's what I say. So, but you have devised this such that you want to continue to enjoy the benefit of exemption. You may run the risk. It is up to the directors. See, one is a compliance angle, and whether you in between DPT-3 will come, whether you will show as exempted deposit or deposit.
Correct.
Amount received from a director. Once is now a director and it's not repaid. So whether you will show from exempted to non-exempt, from exempted deposit to deposit now. I say safely you should call it as a deposit.
Deposit. Otherwise, the companies may take shelter. So if any amount by accidentally it receives from a individual, then they may have that person as a director immediately, and then later on they may resign.
Later on they may resign. But see, act is silent. See, somebody may argue, it's explicitly provided for the promoters, but whereas it is not provided for the directors. That this enjoys the benefit of being exempted deposit as long as the director. Okay, it is silent there.
Got it.
What is the intention of the legislature keeping it silent when they are explicitly provided for the promoter? Any amount lent by him linked to the borrowing of the company insisted by the bank or lending institution. But here no such condition is imposed for the director.
Okay.
You can't enjoy this for a long period, perennially, or at the most, if there is an agreement, lending agreement is there, unsecured loan agreement, to some extent safely, if it is covered under that agreement, you may enjoy it. But in the absence of agreement, I will say squarely it will become deposits in the absence of any specific written agreement. If the written agreement is there, okay, for the balance repayment period, you can enjoy. But if you use this as a device to circumvent the provisions of deposits, you run the risk.
Correct. Correct. So moving forward to next question. Amount raised by an unlisted company by issue of unsecured non-convertible debentures. I guess this is covered in
Yeah,
one of our rapid fire also.
yeah.
Uh, One more question which we received. We run a school under a Section 8 company and students pay their fees for the year in advance. Is that advance fee be treated as a deposit?
See, it is a service. It is a service, and it is for a Section 8 company. First and foremost, Section 8 company, yeah, they can receive in advance. Most of the schools now taking full fee in advance, and that 1 year, in my view, that 1 year period will apply. As long as the advance is for the respective year, it is fine. If you're receiving advance for next more than 1 year,
Okay.
then the balance amount which you are not appropriated within 365 days towards school fees, then which you can't appropriate because the amount received is for not only for this year, you are received for next year or thereafter. Somebody may pay 4 years fee at a go.
Correct. Correct.
So then you may run the risk of being treated as deposit.
Then what are the additional period the amount is received? It will be treated as deposit.
Obviously, no, because additional period, if you within 365 days, if you don't appropriate this towards the school fee and issue a receipt to the student, the amount unappropriated will be treated as a deposit.
Understood. The next question. During the financial year, the company acquired a partnership firm by way of a slump sale in accordance with the provisions of Income Tax Act. And in this context, the financial statements of the partnership firm have been incorporated into the company's financial statements. In such a case, how should the unsecured loan originally obtained from partnership from third parties such as other firms or individuals or trust be disclosed and reported in Form DPT-3?
See, acquiring a partnership firm acquisition by slum sale, or partnership firm acquisition by way of slum sale only, right? So all the assets and liabilities, line by line item, will come and sit in the balance sheet of the company against a lump sum amount. It is a business purchase. We call it slum sale or business purchase. Once it sits in the balance sheet of your company, and if the amount belongs to a third party, provisions will hit immediately.
Unless those third parties are
Unless those parties are falling under exempted category,
exempted.
they will hit immediately.
Otherwise, then they will be treated as deposit.
Deposit.
Understood. The next question is, if a company reports an outstanding amount under the wrong clause of Rule 21C in Form DPT-3, what are the consequences? Does the misclassification makes the amount a deposit under Section 76A? And is there a separate liability for the company and its officers for filing an incorrect declaration in the return?
It is a procedural, as far as me is concerned, it is a procedural non-compliances. You can't, by wrongly classifying, you can't change the nature of the amount which you received. Nature of amount cannot be changed. You wrongly classified it.
Correct.
You wrongly, see, there are three scenarios. Wrongly classified and within the exempted category.
Correct.
Second, wrongly classified it as an exempted deposit, whereas it's deposit. Third,
So
wrongly classified it as a deposit, whereas it's exempted deposit. You understood? The three categories.
three
Amount which is not a deposit, but you classified as a deposit.
categories.
Amount, second category, amount which is a deposit, but you are classified as an
Exempt.
exempted deposit under Form DPT-3. Third category, are you saying within the exempted category you are classifying under a different category?
Within the exempted, I guess we received this
Do you
question.
have the form? Do you have the form asking you to map each amount, exempted amount, to each class of the given under rule 2?
Yes, yes.
So, yeah, so then this even third category also will come.
Correct.
As far as filing and disclosures is concerned, it is the non-compliance of filing and disclosure. Corrected by filing a revised form, if it is permitted.
Revised form is not allowed, sir.
Revised form is not allowed. If revised form is not allowed, you run the risk of holding it, but in next year you have to change it. That's all.
Okay.
So wrong declaration, wrong disclosure, wrong information. You have that section 450, and also another section is there where you make a wrong statement. What is that section? In any of the
447.
documents, in any of the documents or form, if you have made a wrong statement, that section 440, 424, 424, on 424, provisions for 447. Punishment for false statement
Correct.
under section 448.
440.
You will be subjected to that 448. And 448 says, and what it says 448?
So while filing form DPT-3, the signing director confirms that all the information
Yeah,
given
true.
above are true and
True and
correct.
correct. So that becomes a false statement.
False, yes.
So section
Pursuant to which
448 for the
448
benefit,
will be attracted.
yeah, for the benefit of all, save as otherwise provided in this act. If in any return, report, certificate, financial statement, prospectus, statement, or other document required by or for the purpose of any of the provisions of this act or the rules made thereunder, any person makes a statement which is false in any material particular, knowing it to be false. Knowing it to be false, you have to attribute the intention, which omits any material fact, knowing it to be material, he shall be liable under section 447. You can't take, you can't do a casual filing.
Understood.
And if you see each form, you have that 447, no?
Yes.
Every form now carries with that rider saying that no, wrong filing you will be subjected to fraud under section 447 and 448.
Correct.
So 448 will hit. Yeah.
Next question. A company receives about 50 lakhs from another company, that is a related party, under an ongoing commercial arrangement for the supply of goods or services, run through a continuous account of invoices, adjustments, and fresh receipts. A balance of about 50 lakhs has nonetheless remained as advance from customers for the past 3 to 4 financial years. Is the balance a deposit because it has stayed outstanding beyond 365 days under Rule 21C, or does it remain excluded under Rule 21C as money received from another company? Notwithstanding that the advance
See,
from customers
if
disclosed.
it is a commercial transaction, in case of an ongoing commercial arrangement between these two companies, Incidentally, every year at the end of the year, amount lying as an advance is same amount. In your case, you are showing it as same amount. Maybe it's incidental. Maybe it's incidental that no amount lying as an advance for last 3 years is same amount. And if the period of this amount, the last amount, is not more than 365 days, maybe it's an advance and you need not be treated as deposit. But if it's an ongoing an account, like you supply, receive, supply goods and money receive, is continuous account, ongoing an account, as long as you are able to prove that no service is provided, goods are supplied for the amount not within 365 days, then you are safe. But this 15,000 or if 50 lakhs amount is received as an advance or security deposit, security towards supply of goods, then you should classify this as a security deposit, not as an advance from customers.
Understood.
Time is 6 o'clock already. Quick.
Okay. So now we have completed all the questions that we have received.
Yeah.
So we'll now open the floor maybe for another 5 minutes.
See any questions in the chat box?
So we have only one question from Madhur Gandhi.
Yeah, that I already addressed it.
Correct. We already addressed it.
Addressed that.
Now, if the participants have any questions or require any clarification, they may feel free to ask. Any questions?
Hi. Hello, sir.
Yeah.
Sir, my query is regarding one of the example was there regarding school fees received in advance. So, if it is, as you said, if it is more than 365 days, then it would it would be treated as deposit.
Yes.
But then my question is, sir, for example, now ICSI receives allows to pay fees in advance, like for more than, I guess, 3 years or something.
Okay.
So in that case, does it qualify
ICSI
as
is not a
deposit?
company. ICSI is not a company, no?
Section 8 company?
Not even Section 8 company.
Not-
ICSI is an institution formed under a separate act of a parliament, the Institute of Company Sectors of India, like IBBI.
Okay.
Like IBBI, now you have IBBI, ICSI, ICAI, ICMA, and ICSI, IIP. All these things are ICSI, IIP is Section 8 company. If ICSI, IIP receives money for providing service. For providing service beyond 365 days, then it is a deposit.
Got it.
Thanks, Madhur.
No, yeah.
Any other questions?
See, in insolvency, we pay to IBBA once in 5 years.
Okay.
But whereas for ICSI, IIP, for continuing as a professional member, we call it as a professional member, and then IBBA, we call it as a registered member. So before we become an IP and eligible to practice, you must first register as a member with any of the IPA, Insolvency Professional Agency. So one of such professional agencies, ICSI, IIP, ICSI, Institute of Insolvency Professional Agency. ICSI, IIP is collecting every year fee, whereas IBBA is collecting once in 5 years. Is a regulator, and they are formed under separate. IBBA is formed under a separate act of parliament, whereas ICSI, IIP is a Section 8 company.
Okay.
That's why they are only collecting yearly, and whereas IBBA they can collect for more than 1 year, and moreover, that's not a company. It is a body established. It's an authority established under a separate act of a parliament.
Correct. Understood. So I guess we have covered deposits completely, right from starting, like understanding what is deposit, exempted deposits, the compliance part, the procedure, and the penal provisions, and also the case studies. So that's where we come to end of the today's webinar. I thank you, sir,
Thank you.
for sharing your experience and your time with us today. And I would like to thank all the participants who have joined us for this webinar. This has been the 14th webinar in our knowledge series 2026, and we look forward to having you with us at the next one. Thank you and have a great evening.
Yeah. Thank you, Akash, and thank you all the participants for patiently listening. And I hope I would made some inputs and impact on the concept of deposits. Thank you.
Thank you. Thank you so much.